All right, this is LJ Russell, another episode of Stocks and Squats. Actually, this is a continuation from last week's, which is June 29th through July 2nd week of trading. If you've seen some of my videos after that video, it's because I'm trying to make my videos a lot shorter, smaller, so that they're more digestible and you're not sitting there for a whole hour looking at what I traded and watch me repeat some of the same things. You know, each trade is kind of different, and I want to be able to show you, you know, specifically how this stock looked as opposed to, you know, over and over and over again showing you layers. Maybe I might still do a video that shows over the week how my trading was, but it won't be as extensive as it is when I pick apart these individual stocks. So with that being said, please click like or subscribe to my channel, as I have been posting videos on the stock market, but I will be posting more videos of working out because yeah, I like to work out, and I have received some more equipment to kind of help me, you know, guide you through either yoga postures or other various workout exercises that I believe that can help you. All right. So with that being said, there were three stocks that I didn't get to elaborate on because I saw that the video was just getting too long on my week video. So out of these three stocks, these are the three that were the ones that gave me the hardest time, that I severely just messed up. I would use another adjective to describe it, but I'm trying to keep my words clean. So the one of the three is HCCH, which is an acquisition company. And recently, these SPACs, they're like, you know, they have been acquiring different companies and causing them to spike as, you know, as an acquisition company. So you will have one like SHLL, GPAQ. What was there was? I feel like there was three other ones, and HCCH is another one, right? GRAF is another one. So there's a couple of these that have been moving, and I know there's going to be more that's going to pop up, particularly right around now with this economy and how things are moving. Companies are going to go bankrupt, or they're just going to be, you know, bought out by another company. There's going to be some M&A activity happening. It hasn't been happening as frequently, but it will happen. So HCCH, being that I bought this mainly because you know, it's been spiking, and we see that over time it really hasn't been doing much, and there has been a split with the 5100 and the 200 EMA, right? The green, the yellow, and the red lines. So I typically like these because when there's a split like this, the stock typically goes up. But when you don't have a lot of volume on a low float stock, the spike can be muted and not happen at all. So with this stock, and we can tell, you know, I bought it one day beforehand, and was able to get roughly $1 a share out of it, you know, from 12.21 to 13.15. So I tried it again. Let's zoom in a little bit. So I tried it again like 2 days later, right? So on the 29th, right, I did this 29th going into the 30th. I sold, was able to get a nice profit. I said, let me try it again. And I actually did a small amount, right? I did 50 shares because I wasn't 100% sure. And so I did 50 shares. And as we can tell, let's go on to the actual day chart. You know, each candlestick represents 2 minutes, not 1 minute. I do 2 minutes because they don't do 5 days 1 minute. They only do 2 minutes, and that 2 minute kind of represents 1 minute really close. So it just gives it more of a chance to see it over the length of the time frame, 5 days. So here on this day, I bought this, and typically I don't buy this early. I don't buy at 9:30, 6 minutes after the market open. It's probably like the biggest no-no for me. So this is one reason why I lost, and I deserve to lose on this. You know, when you buy too early, when you buy when when the market opens to the point where the stock at 9:30, the stock has not fully awakened. the stock has not found its place in the world. It's like you, right? When you wake up in the morning, what are you doing? You're like grumpy, you're rolling over, you're trying to look for your alarm clock, you don't know what's going on. And you might have this jolt of energy when you first hear that alarm clock and you pop up out of bed, right? That's what happened here. It popped up out of bed. And then after that, it went back to sleep, right? Um, Now, I don't recall what the level two price action looked like over here, but just being an observant of the stock price, right? You see the candle curving down. As we look, we just see all this selling pressure. We see this right here, right? With all this selling pressure, I should have just taken note and sold, right? I had ample opportunity to sell, and I didn't, right? So, and then the 50 EMA was coming closer to the 100. And granted, the EMAs are a lagging indicator, and I know I repeat this quite often, but, when you see that the MACD is going through a significant amount of downside or selling pressure, and then you see that the tan and the blue line, typically when the blue line is below the tan line, that means that it is also going through selling pressure. And then number three, that these lines are starting to cross or going to cross the x-axis of the MACD. Then those three indicators are showing that now it is on a decline, and anything else is holding and hoping. And yes, later on in the day, well, this was the next day. This was pre-market the next day. It went up to 13, right? But this whole day, this is where it's at, right? So I end up losing 80 cents a share. Even though it was only 50 shares, I lost 80 cents. Now imagine if I said, hey, let me trade 400 shares, and I did this same thing, right? I would be mad. 50 shares, probably not a lot to be mad at because it's really only like $50, $40. But still, at the same token, you have this type of move that goes down here. Just because the share size is not a lot doesn't mean that the activity I will not encounter the same type of price action activity. Right? So that is this one here, and those are the three things, right? Already with the MACD confirmed three reasons why to sell this, and I relatively ignored most of it, right? And then the fourth thing on what I broke my rule was buying so early after the market opens. The next one was VERO. VERO. So I bought this. I think it was after hours. I remember because I was walking outside and I was like, "Hey, this is up on news." It was like FDA clearance, yeah. So it was up on FDA clearance, and this was on the second. Um, no, actually, it should have been on the first, I believe, when it happened. The second, yeah. So it was up on FDA clearance on the first. So I said, "Oh, great." Now, first and foremost, for me, I don't like when these EMAs are so far apart. It makes me very, very critical on what could happen. Right? It could get slammed back down, like what you did. Right? It got slammed back down. Um, but all at the same time, this could have been avoided because if I look at how this stock really has acted, um, I bought on this day, right, on the first. Um, it was below the 50 EMA, which is one, below the 100 and the 200, which is also one. Number two, second reason, is that this space is too wide. It's too big. There's too much space. I need the 200 closer to the 100 and the 50 EMAs in order to really make this a trade. This is like a $2, almost $3 apart, right? I had no reason trading this, and other than the news, of FDA clearance to sell their stupid ass drug, there was no other reason why I should have bought this, and not only buy it but add more shares. So let's go into this nonsense, right? So we're a little bit deeper and try to dive into the psyche that is L. Jermaine Russell and why I bought it. So here we are, right? I got in. I got in right around here. The selling pressure wasn't really over yet, right? So it was still going to sell a little bit more, and I bought 200 shares, and like it's okay, okay. I bought some more when I figured that it was starting to settle, right? It was starting to settle, and that the selling pressure was almost coming to an end. So I bought some more at 475. So I got 300 shares now, and then it started to rise on up. Now I've been so much better on holding on to my day trades. Like I have day trades, I can use them, and this was an opportunity where I could have actually used my day trade. Seeing that, this is hindsight now, but seeing that the price action was really, really funky on that day, like the spread was 20 cents between the bid and the ask, or it'll become 15 cents, or then it become cent and then become 15 cents. It was really, really funky. When there is a factor like that that can dictate or manipulate the way that the stock moves, that is a great indicator to say, hey, get out. Just don't even play with it, because you don't know, it's no longer in your favor. There's only a few things that you can actually control when it comes to the stock market as a day trader. One of them is when you enter in, and the other one is when you enter out. Everything else are wide ass variables that you cannot control, but you can only use as guides to help you in your profitability. And this guide that I had as a level 2 was not helpful. So this alone to determine price action should have been more than enough reason why to get out. And I didn't get out. So, take it upon yourself. You look at your level 2. You look at your level 2 and see if, when you're in a position, to see if you can get an idea of how much the stock is moving, right, or going forward. And then typically on a regular day, right, and I bought more because I'm a glutton for pain, apparently. So like I bought more, and then what happened? Before I get into that other thought that I was about to suggest, but what happened? Early pre-market, it went up to 579, right, at 4 a.m. Thinkorswim doesn't allow you to trade at 4 a.m. It doesn't happen until 7 a.m. So we come to 7 a.m. Where are we at? Right now we're at 534. That would have been a perfect time just to get out. I didn't get out. Being that, see the 50 EMA crossing to the 100 should have been, it was below the VWAP. Should have got out, chief. Didn't get out. So this loss was deserving. I waited way too long to get out, and I got out at what is this, like 452. So I believe my average on the day was like $5, maybe 4.95, but I want to say it was closer to 5. So I lost 50 cents, a share on it. I could be wrong. I think it was, I want to say it was $5 a share, maybe 4.95 or something like that. At the end of the day, it was still wrong. Let me see. I know it usually is the price for us. Did it ever? No. Okay. Well, can't really tell, because I know usually when it adds all the shares together, it does average the price on the chart. So that's usually helpful, but I can't tell on this. But essentially, I saw it, I didn't adhere to it, and I could have got out, should have got out, didn't get out quick enough. But that's okay. I know better now, right? Particularly when it has these spikes and they're below the VWAP, and it keeps on getting slammed back down. And why they get slammed back down? Because that 200 EMA is so much higher, so much higher than that 50 EMA. And then the last stock, last one, CARV. I bought this one, right, because I am black, and I allow this to play on my emotions for, black businesses matter. I remember saying that on Twitter, and I was a dummy for buying this. Again, I bought it before and I made some money off of it. And I bought it before and I've lost some money off of it. Well, the time that I lost money, which was this last time, because 2 out of the 3 times I lost money on this. Um, so when I bought this last time, the candlestick alone should have been, the candlestick was kind of like this, right? But this candlestick alone should have been a great indicator on why not to buy it. When you have a strong red candlestick like this, there's no reason to buy it. It's just leave it alone, right? Yes, it spiked up before, and yes, it was easier to make money on it the very first time I traded it, but it wasn't doing what I wanted it to do, right? The first time I bought it at 1761, sold at 2075. Next time I bought, let's see, how did I buy it? I'm trying to think. It was 150. I sold 150 shares here, and then I must have bought around here at 1578. So I can't really tell as much. Yeah, I bought 50 more shares here. Yeah, I remember that one now. Yeah, so I know this was a couple of weeks ago, 2 weeks ago, but I still wanted to look at it. See, I bought 150 shares. It was kind of relatively close in price, but the price action. I bought this pre-market. That was one of my biggest rules, is not to buy in pre-market. I bought in pre-market. I'm not a big pre-market buyer because of stuff like this. But I got ahead of myself and bought. So I could have left it alone, but did not. So I deserve that loss because I broke my rule. And then we'll go to the actual day in question, which was last week. What day was this? This was the 30th. Last week, Monday. So last Monday, we have to do the 5-day chart. Let me look. Yes. So last week, Monday. All right. So I bought a little bit too soon still. Um, yeah, a little bit too soon, because it was before 10:30. Um, by before 10:30, I bought this thinking that the selling momentum was over, right? But clearly it wasn't, because these 2 lines was crossing below the x-axis. So I should have given it a little bit more time. But either of the fact, right? 1089, I bought it. It spiked. It actually spiked right after that, right? It spiked up to 1144. Um, I could have sold there, but it also slammed right back down. And then when it slammed down hard. Um, this being below the x-axis of the MACD, I don't even think that would have helped me. I think that it was just a relative issue on recognizing that this red candlestick that was forming was pretty bad, and it's bad to even get in. Let me see if it will show on the hour chart, because the hour chart is usually showing some of these things. Yeah, so we see on the hour chart, we see this after doing such a run like this and then come back down. There's no reason why I need to buy in, none, right? None at all. You can see it, like red candlestick. You take this to now the on the hour, or well, you take this now to 10, and still see it's down, right? And it's down, like right down to $9 a share, 9.20, right? And then same thing for the next hour. So it was not showing me anything that was relatively valuable in suggesting that the stock was going to go higher. So use all the candlesticks. That's what I'm going to say. Use all the candlesticks, use all the time frames to really get a sense of, is this stock really worth it? Because at the end of the day, this stock wasn't worth it. I allowed my own emotions to get in because I saw how high it went up, and that I kept on saying, well, black businesses matter. Some of them do. Not all of them do when you're a day trader, right? Sometimes they're just pure hype, and then because they're being hyped, they're being manipulated, that you too with your own emotions are being manipulated. I lost $2.50 a share on this stock unnecessarily, right? I'm grateful that I was able to get all that money back, but at the same time, I could have saved myself the time and the emotional pain if I had just said, look at that green, look at that red candlestick. It is not green. I should leave it alone, and left it alone. So, um, I'm not going to beat myself up over a trade that I took last week, being that I've been up thus far because of this stupid nonsense. But it was a learning lesson that had to be learned, and I take it. I'm so grateful for it, and it has given me an opportunity to even look deeper into my next trades. So, with that being said, thank you for watching this episode of Stocks and Squats, at least the stock part of my channel. Please hit like and subscribe if you definitely like this video. You want to see more videos just like this. But I will leave you to that. Well, remember, Carver. Remember what I taught you on Carver. Remember what I taught you in HCCH, and also what I taught you in VERO. So these are definitely very strong, important learning lessons that I will hold with me. So thank you so much, and then I will see you in the next video.